All right. Hey everyone. Good morning, and thank you for joining. Thank you for joining live. I know it's a challenge to join on rainy mornings like this, but we do appreciate your time. And I know there's been lots of activity here in the last week. So let's just jump right into it and try to figure out what the markets are telling us. So fundamentally, I want to break things down into two buckets of information for you. And I want to try to keep it really, really simple. So in the first bucket, what I want to put in is the normal stuff. So we have a normal bucket and we have an abnormal bucket because the market is doing everything it can to digest all of the normal stuff and then put on top of that all of the outlying stuff that we're not used to. So first, let's go through our normal bucket and just kind of summarize it, okay? Normal bucket, we always start with our supply and demand. We start with what our carryout is, and we work from there and overlay, weather, what's happening in the rest of the world, what our demand numbers are, and what's happening in other markets to see if we can and identify strength or weakness. So when you add all those things up, right, in the normal bucket, we have our nearby weather, and included in that is our planting progress, which we did catch up according to yesterday's report. We were right back on track on both corn and beans. But what's not planted is the stuff in North Dakota, and they're still way behind. So there's a lot of talk about 1.5 million or a little bit more of prevent plant acreage moving away from corn. Now we don't know exactly what they'll do yet, but in the normal bucket of fundamental activity, planting progress is slightly bullish. Let's call it that way. Now we have weather. This is the time of year when we switch from a demand-driven market to the supply-driven market, right? A demand-driven market, we look at the headlines every morning at 8 a.m. and we try to see who bought what from yesterday. And that typically lasts from December, January, February, March, April, and May. And then sometime in May, we switch our focus and we start trading the GFS weather headlines that come out every 6 hours. And we trade those from May, June, July, August, and September. And then we kind of have a middle ground and then we shift back to demand. So what's front and center right now is the weather, right? And what does it look like for the next 2 weeks as we start to get this corn and bean crop up off the ground? And to make it really simple, in Iowa, Illinois, and Indiana, in southern Minnesota, where it really counts, it looks good. There's nothing out there that says, hey, we're going to burn this crop up and we're not going to pollinate it. So we have to go immediately higher. So you've got a slightly bullish planting situation. You've got a bearish growing situation, right? Because there's no reason to think that Iowa's not going to have a huge yield. Now, on the demand side, which still does matter, we have just incredible strength. You're seeing, even though the energies imploded, or they didn't implode. They had a key reversal yesterday, right? They traded much higher and then they came back off their highs. But the reality is that fuel stocks are at 5-year lows coming into the busiest season that we have. So the stocks are getting tighter, not looser, and all of the energy prices, RBOB, ethanol, they're all trading at their highs. And this is a consistent theme with what we've seen for the last 2.5 years, since the beginning of this big rally, where we have actually seen the profit margin expand into much higher input prices. And we've seen it across the board. It's unfathomable. And there's no law of economics that says that should have happened. There's nothing in the textbooks that would cover what we have witnessed for the last 2 years from a margin expansion standpoint with grains. Go back to 2018 when we had our or 2019 when we had our little delayed planting weather situation. Ethanol was tight when we started. Corn was trading in the mid threes. and in a lot of places it was trading with a 2 in front of it, and the ethanol margin was still really, really tight. And so when corn exploded, from 350 to 420, and we all thought, oh my gosh, the farmers are going to be rich again, we immediately destroyed demand. Ethanol plants, that margin inverted, and the feedstock absolutely rationed corn in the nearby, and we turned ethanol off in a matter of days. I mean, it was dramatic what happened in a short amount of time then. And so now here we are with the price of corn nearly triple what it was, and the ethanol margin is expanded. So the point of that is that the demand side is absolutely robust. There's no indication anywhere that we've slowed down a single kernel of grind. In fact, it's the opposite. We're using more today than we ever have. And so there is no room for error on the balance sheet. So now let's go back to the supply side. So what does that mean? Well, what it means is that we have to have a perfect crop. There is no margin for error for us to slide the yield anywhere below 177, or the market is going to go parabolic. There is no reason to think that it won't, because every indication is that the supply everywhere else in the world is not as high as what the USDA currently has on its balance sheet. So what about soybeans? Well, soybeans, the USDA has been telling us we have plenty of them for months and months and months. South America says they had plenty of them months ago, but then they turned off exports and said they can't export anymore. And so the only two growing regions on planet Earth that both say that they have plenty of soybeans, and yet here we are right at all-time highs. I've got a monthly chart of soybeans on for you here, and here is $17 a bushel, where my cursor is. And it doesn't take a rocket scientist to look at this and say, oh wow, we've actually spent more time above 17 in the last 3 months than we have in the cumulative history of the soybean market, and we have not broken it. Now, what should we expect in the soybean market, or at any market when you're poking around all-time highs? Well, we should expect lots and lots of volatility like what we saw yesterday, where beans rallied right up to a high, and then bam, we rip 80 cents off of it and close 50 lower on the day, right? This is expected and normal activity for where we are. We did some homework on this a few weeks ago, and I think this is really interesting. Where we got to here at the peak at 1765 versus the all-time high came within 2% of the all-time high. Okay, now if I show you the corn chart, you're going to see the exact same thing. Where we peaked a couple weeks ago or a few months ago, relative to the all-time high was within 2%. Now the decline that we've seen down to this level right down here was a 10% decline. It's a little bit more than that, like 10.8 or something like that, but let's round it to 10. And then in the corn market, you see the exact same thing. You see that we came within 2% of the high, and we traded 10% lower. So these two markets have traded identically in proportion to their all-time highs and the retracements. Now, what that tells me is that that's extremely orderly in a very disorderly environment. And what that makes me as bullish as all get out, because a market that's acting rationally and in concert with each other is exactly what you want to see, because that's what you have to have in order to move to all-time highs. So now let's go to the abnormal bucket, okay? And then we're going to dive into our charts here for a minute. So in our normal bucket, the fundamentals are bullish. Nothing's shifted there. On the abnormal side, we have this whole war situation, and we have this whole China situation. Let's start with China, because that one's a little bit simpler. China is the great state of misinformation, right? They lie, they cheat, they steal, they do everything that they can in order to manipulate your market, in order to promote and better themselves. And that's because we believe in a free market, and our government's dumb enough to let it be a quasi-free market. So we let our market be tossed around by the whims of our biggest purchaser. Now, what does that mean for us? Well, that means that we got to really listen to what they're doing, not what they're saying. So they have been on lockdown for the last 60 days. They are coming out of that lockdown. And so a lot of this rally here from the last week, let me back out of here and get to the nearby. Come on, computer. There we go. So a lot of this rally off of this low was in anticipation of them coming out of their lockdown, okay? So you've got a little bit of buy the rumor, sell the fact situation. But the reality is that they have no inventories. They say that they have them, but their soybeans are trading much, much higher. You know, they're trading in excess of $21 a bushel. Their hog herd is rebuilding. Their people are being fined and put in jail if they throw away food at a restaurant. So you can't convince me in any stretch of in any way that the soybean market is plentiful in supply when people are literally having their freedoms taken away from them if they throw something away. That makes no sense whatsoever. And it explains why we're trading right around an all-time high, even though the USDA says that we have a plentiful abundance of carry forward. It simply makes no sense. So this market looks to us like we should be expanding higher, but yesterday was a surprise. So we got to digest this a little bit. Clearly, that's a big, nasty day, right? It's an outside day. It took out 1, 2, 3, 4, 5, 6 closes on a closing basis. It had big volume, and it was very impulsive. So the presumption, I think, is that people are going to rush in and say, oh my gosh, well, we're just going to drop all the way down to like $14, and it's going to be a straight shot, and oh my gosh, we have to do it right now or we're never going to get to sell it. That might happen at some point in time, but it's not today because we don't have enough supply that's been proven in order for us to say, oh yeah, we've made a crop. Remember, we've got prevent plant. We've got an entire growing season ahead of us, and we have fuel at an all-time tight margin, and we have energies absolutely exploding everywhere else. So the fundamentals just aren't ripe enough in order for us to say, oh yeah, we're all good. I can pull up seasonality charts. I can pull up pollination charts. I can pull up all kinds of charts that will show you that we're too early to have a secure supply situation. And we're tight enough at these levels that at any point in time, this thing can absolutely rip to $2, $3 higher, and you won't even see it coming. And in order to get the fodder for that, you got to have days like this where you shake everybody out and you bait the shorts into it, and then you turn around and you absolutely rip their heads off. What are our oscillators telling us? Well, here's your RSI. We're right down into our buy zone after starting higher. Okay, this is actually a buy signal, not a sell signal. So soybeans, despite yesterday's action, the break that we have right now is an opportunity. It's not something to be scared of, and that's how we view this market as of today. All right, now I need to switch over to corn here because I haven't showed you that chart. Okay, here's your corn chart. Here we are. Here's last year's high, right? We broke it. Oh my gosh, now we're going to come back down and scare people and say we're moving lower. Remember, take you back to the monthly. Here's your all-time high. This is the exact same trade setup that we had in soybeans, right? We traded to within 2% of the all-time high. We had a 10% pullback, and now here we go once again, challenging it back. On the monthly chart, you have an inside month from the month of April. You have a pretty nice hefty trading range, but you have no chart damage whatsoever on the monthly chart. On your weekly chart, you have no actual chart damage. Yes, we have a big range. Yes, we could sell on back down. You know, we could come all the way down. I mean, gosh, we could come all the way down to 650 and still not do any damage to this chart. I don't think that that's what's going to happen. I think we're going to see a few more days of weakness, but I don't think that we're going to see, hold on, ZCEN22. All right, here's your nearby chart. This is your daily chart of corn. I think we're going to see a few days worth of weakness, but I don't think that we're going to see an all-out downtrend start. And the reason for that is a lot of these counts. Okay, so let's take a look at this. We've been talking about this for quite some time, and we've been talking about the fact here. This is the chart I have marked up. We've been talking about these parallel lines here for 2 weeks. Is that as long as we stay within these parallel lines and we keep testing it and it keeps getting ugly, but as long as we stay kind of in this parameter right in here, you can take this entire range. We can trade down into it as long as this area holds and we kind of keep grinding sideways and we don't just explode out of the bottom. Then you have to look at this as a corrective move. And what happens after a corrective move is you explode up out of here. Now, what could cause that? Well, in our abnormal bucket, we have Russia, right? We have this rumor that the United Nations went in and had a really, really good meeting with their foreign deputies, and they're going to open up grain supply routes to feed the world. But what they have on that are conditions that, one, the United States stop supplying any military aid, financial or otherwise, and that we lift all sanctions against them. And so there's a huge question as to whether or not it's going to happen. Now, the real meeting is scheduled for June 8th. So between now and June 8th, it is anybody's guess what will happen. Putin could escalate. We could de-escalate. The funds could decide to liquidate and sell it up until then and sell the rumor. And then if it falls apart, they turn around and buy the fact back. So I don't think it's something you want to chase to the short side, because the bullish fodder of those negotiations breaking down, coupled with our current fundamental situation, it's too bullish in order to turn around and sell it as of today. We've got to see something more than 1 day of price action and no fundamental support behind it before we turn around and just sell this market and say, hey, we're done. We want to sell 2021, 22, 23, and just get rid of everything else. I think our upside is way too explosive when you really look at these chart setups and you combine how orderly beans and corn have been to one another. All right, now let's look at wheat. Wheat's the same way. The fundamental bucket for our wheat market is anything but safe. Remember, we were trading almost $9 a bushel before Russia invaded. If we look back in here, everyone said, "Oh, we've already priced in the war," and we said, "No. What we're doing here is pricing in peace." And then the war happened, and we exploded higher. I think what we're doing now is we're pricing in some difficulty, but we haven't begun yet to address the fact that our wheat crop is a disaster and our spring wheat crop that we're trying to plant is way behind schedule. And remember, we're still using numbers from last year published by the USDA that have the Canadian crops way higher than they actually were. The USDA has just not fessed up to the supply situation on any of those things. And it shouldn't be a shock, right? It's the same weather patterns. It's the same, the country boundary, the border doesn't change the weather. So if our crops burnt up right on the border, theirs weren't records. That is completely illogical, but that's what the USDA has been telling us. So I think our wheat situation is much more dire than what the market is currently trading. And any type of disruption or continued disruption out of Russia, we're going to send wheat much, much higher, which is also how the technicals are set up. We've done no chart damage here, and yes, limit down yesterday on the rumors. I think that's a buying opportunity, and we've got to get much, much lower before that opinion would start to change. So, in conclusion, right, there is too many unknowns, and our balance sheets are too tight in order for us to turn around and sell this market off of 1 day's price action and off of the rumor of peace. We have got to see more before we take any type of action that way. If anything, I would be looking to re-own it into any type of a deeper pullback for all three of our grains. And the same would apply for cotton, same applies for meal, same applies for oil, same applies for all of those different commodities, because we're just simply too tight. Okay, that is 20 minutes, and I feel like I just said a million words, but I really do mean it. There's nothing out there that tells you that these markets have that we've created new supply or that we've curtailed demand. And we've got to keep it that simple, or else we're going to get lost in the weeds of all the volatility, okay? There's been nothing that's shifted from week to week to week. We got to stay the course, and we got to keep right where we're at until the market absolutely demands that we change that mindset. Okay. That is what I have for you guys this week. I hope it was helpful. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. I will keep you updated as needed and as the market conditions dictate. I will talk to you next week. I hope you have a wonderful weekend. Thank you for joining this morning.